Mosley. Trent.
We have established a quorum. Just so everybody is aware, we did remove Senate Bill 158 from the agenda today. There was an issue with some people that wanted to come up. They were afraid of the weather, so we are not going to have that today. We're just going to have Senate Bill 181. So I believe we're just going to go ahead and have the hearing first while we wait on a couple more people to arrive. So our vice chair is going to take the gavel, and I'm going to come down and present my bill.
We will now hear Senate Bill 181. Senator, you may proceed when you're ready.
Thank you, Mr. Chair, members of the committee. For the record, Sandy Crawford, District 28. Thanks for the opportunity to present Senate Bill 181. So in 2016, to facilitate the rideshare programs such as Uber and Lyft, we passed legislation that created a framework to clarify what insurance coverage happened when. Like when somebody takes their personal vehicle and they're using a company's digital platform, we just wanted to specify whose insurance kicked in at what point in time. So since that time, new business models have developed in that field that fall outside our current statutes. And so instead of just having ride-sharing programs, now people can deliver services through online platforms such as maybe DoorDash or Uber Eats, or they can even share their vehicles. So this Senate Bill 181 is an attempt to set that framework up for those types of businesses. And so there are two primary components of the legislation. The first one is peer-to-peer car sharing insurance, and that will address the car leasing. This legislation articulates the liability of a shared vehicle when a personal vehicle is put to commercial use, and it requires that either the commercial platform or the vehicle's owner obtain sufficient liability and uninsured and underinsured coverage for the commercial activity. The bill benefits vehicle owners by disclosing the liability requirements, and requires all insurers to share their policy information, and it benefits the customers by ensuring that there's not a gap in the insurance coverage in the event that there is some type of an accident. The other piece is the Delivery Network Company Insurance Act, and it addresses delivery drivers. This bill seeks to distinguish between personal liability and commercial liability when a vehicle owner is using the application to perform a service. And it also mandates disclosure requirements for vehicle owners, and it requires all the insurance providers to, again, share the information in the event of an accident. There's really no dispute that we need to, that insurance needs to be provided. I think everybody agrees that all parties need to be insured. The question is, when does the personal liability end and when does the commercial obligation begin? So under this proposal, the commercial coverage would begin when the driver has the application open and it's available to receive requests to provide the delivery services all the way through the delivery, and these provisions would take effect October 1st of 2026 to allow time to get the system set up. I do know we've heard from several different players in this space, and I know we still probably have some language that we need to tweak. We'll be meeting after this hearing to try to come to an agreement. So I just want to put that out there. This likely is not the final version of the bill, or it may not be the final version of the bill, depending on what we get worked out. So with that, I can answer questions, but I think I have several witnesses that can kind of tell you the reasons for and maybe their problems with this particular language.
Thank you, Senator. Questions for the bill sponsor? Senator McCreary.
Thank you. So one of the questions I have is what the bill means, what you mean by the app being open. So I'm probably scared to look at my phone. I probably have 20 apps open right now. So that's something I'm going to really want to try to understand, because to me, open is pretty vague.
So it's my understanding that some people that do these jobs, some of them keep the app open all the time, but others don't. And it has to do with, I think some companies leave them open all the time. Some of them just have them open when they're actually doing the work. So I think you'll hear from probably both sides of that issue. I think there may be some issues in different companies do it different ways. So I think that's where we've got to come together at, is trying to figure out the different apps work different ways. So I think that's where the rub is. So I think they can probably give you some detailed information on what their issues are when they come up.
Thank you.
Further questions for the bill sponsor? Seeing none, thanks so much. First witness to testify in favor of Senate Bill 181.
Good afternoon, Mr. Vice Chair. First, I want to thank the bill sponsor for bringing this piece of legislation. Just to reiterate some points, back in 2017, we have, and again to reintroduce myself, my name is Hampton Williams. I'm with the Missouri Insurance Coalition. Back in 2017, the General Assembly had passed legislation to incorporate a regulatory regime for rideshare companies, and that's Uber. That's situations where you are driving your vehicle for another individual. Both of these components are identifying markets that are within the same field but currently sit outside of those regulations. The purpose of this bill, again, is to ensure that there are not gaps in coverage with both respects to these components. We'll hear testimony today. No one disagrees that there needs to be some type of coverage available, and so as we get to this hearing, I would ask this committee drill down on what specific elements that any of these individual parties are looking to resolve. With respect to the first component, which is the peer-to-peer service, this is situations where you are allowed to rent your, it's not rent, it's lease or share your vehicle through a digital platform. There's really no dispute, to my knowledge, with respect to when that transaction or that platform begins. The questions that Senator McCreary raised has to do with the second component, which is this delivery network companies, and that's circumstances where individuals are delivering either goods or products on their applications. The language that we've incorporated in this bill actually conforms with the same language that we've used in the Uber bill, and that's in Section 373-1702.2, which states that the commercial liability policies would start, quote, when the driver's logged into the transportation network, company's digital network, and is available for transportation requests, but is not engaged in a pre-arranged ride. I like to conceptualize that as, if you think of an old taxi cab, when they turn the taxi cab light on, that's when they're on the service. Back in 2017, that was the business model for many of these rideshare companies. Many have been able to comply with that, and some of the testimony you may hear today will be from entities that are both in this ride-sharing space as well as the delivery space. Similar legislation with respect to the peer-to-peer component has been passed in California, Colorado, Kansas, Kentucky, Illinois, Maine, Ohio, and Rhode Island. The delivery network component, similar languages have been passed in Kentucky, Indiana, and North Dakota. In both circumstances, we know that these companies are still able to provide services in those states. So we draw your attention to that. The purpose of this, again, is to not exclude anyone from the market. The purpose is to make sure that we have insurance in the event that there is an accident in the provision of these services. I'm happy to answer any questions.
Questions for the witness? Seeing none, thanks so much for being here.
Thank you, Mr. Chairman.
Let's have a witness in opposition. Any witnesses in opposition to Senate Bill 181? Please proceed when you're ready.
Thank you. Good morning. Good morning, Chairperson, members of the committee. Thank you for the opportunity to speak with you today. My name is Sean Vink. I'm Associate General Counsel at Turo. Turo is a peer-to-peer car-sharing company. We operate in Missouri, 49 other states. Very proud to do that. I want to speak to the peer-to-peer components of the bill. Much of the bill is based on, as was mentioned, the NQUIL model. We have no objection to that. We support that. 28 states in the United States have enacted peer-to-peer legislation, and if Missouri were to do that, it would become perhaps the 29th or 30th. We have one concern with this bill. I know it was mentioned earlier by the bill's sponsor that there would be a discussion afterwards. Look forward to participating in that. Our concern relates to language, the so-called scope language, which we think is unnecessary. 25 of the 28 states that have enacted the legislation have not included the so-called scope language. There's various reasons for that. In the case of Missouri, we think it's unnecessary. It's contrary to the typical practice in Missouri to have purpose language. That's pretty clear from Missouri's legislative drafting manual. So our position would be that that should be excluded. That said, happy to participate in a discussion with the sponsor and with other stakeholders to see if there is a mutually agreeable solution. I want to be clear, we have no position with respect to the delivery network company components of the bill. We are not in that business. Don't have a position one way or another. Thank you for the opportunity to speak.
Thank you. Questions for the witness? Senator McClure.
Thank you for being here. So this bill has a lot going on in it. So when you say scope language, are you referring to page 1, 379.1905, where it says nothing shall be construed to extend beyond insurance?
Yes, ma'am, yes.
Okay.
I believe, I don't have the bill in front of me,
Okay.
but I believe that's correct.
Okay, so I want to try to understand what you're saying. You think this language is not necessary?
Yes, ma'am.
Okay, so I'm just wondering, it seems like the position of the company has changed through the years, as far as I could tell. There was somebody, and Senator Whelan was on this committee back in 2019. Someone named Ethan Wilson with your company said that that model language was okay,
Right.
that Turo supported that model language that's in this bill, and that it had been through negotiations for almost 2 years. So I'm just trying to understand why the company position has changed since 2019.
Well, we don't feel that it's necessary. Our view is that that language was just hortatory, rhetorical in nature, and not part of the substance of the bill. What's changed is that in various situations, that language has been used in other contexts to suggest that peer-to-peer is the same as rental car company. And what we want to make clear is that this legislation is dealing with the business of insurance and only insurance, and is not establishing a precedent with respect to any other area that peer-to-peer and rental should be treated the same. We want this to be limited simply to the subject of insurance. And we're concerned that the language as written can be construed in ways that are prejudicial to our competitive efforts.
Okay, thank you.
Yes, ma'am.
Further questions for the bill sponsor? Or, I'm sorry, for this witness. Real quick, just to clarify, because I'm still not quite following. How does this go, I guess, this section here, I know you don't have it in front of you, so it makes it a little difficult. Tell you what, could you get me an explanation in writing as to what your problem is with this?
Sure.
Section 379-1905?
Yes.
Thank you so much.
Thank you.
Any other questions for the witness? Seeing none. Thank you so much.
Thank you for the opportunity.
We're going to go back to testifying in favor. Next witness to testify in favor of Senate Bill 181.
Great. Thank you, Mr. Chairman. Madam Chairman. Members of the committee, my name is Gordon Reel. I'm a Vice President of Government and Public Affairs for Enterprise Mobility. We have been based in St. Louis since our founding in 1957. We are the parent of Enterprise, Alamo, and National Car Rental and other transportation mobility services. We want to thank the committee for hearing Senate Bill 181. I want to thank the chairwoman for introducing the bill, and we come in support. And we really support this language because it is the only bill introduced in the Senate that truly reflects the model for an insurance framework for the peer-to-peer car rental companies. And this model bill was put together by the National Conference of Insurance Legislators, or NCOIL. Enterprise engaged with other stakeholders at NCOIL on this model and supported it in its final form, as did other peer-to-peer companies. And we supported it because of the scope language, which restricts the definitions specifically for insurance law. Enterprise recognizes that the peer-to-peer car rental business needs a slightly different framework than others in the rental car industry. That's because there are three parties to the transaction. There's the vehicle owner, there's the platform, and there's the renter. And the NCOIL model addresses that. So why is the scope language necessary? It's a question we get quite a bit. Well, we have seen a number of peer-to-peer companies that market and operate a lot like car rental companies when it's in their favor, and they hide behind the separate peer-to-peer definitions when it plays to their favor. Typically, they do not want to be considered a car rental company when it comes to collecting taxes or operating at airports. In other words, some platforms in this space like to play games and when it comes to the law, and they want to pick and choose what laws apply to them and which ones don't. For example, specifically in the bill, Section 379.1910, sub 6, defining peer-to-peer car sharing, they do not want to be considered a car rental company. And the car sharing program, also defined in the bill, same section, sub 7, they do not want to be considered a car rental company. But if you look at Section 379.1935, they want to exempt themselves from vicarious liability, and they cite a federal law known as the Graves Amendment for Congressman Sam Graves, who passed that law in 2005, and if you read that federal law, it explicitly covers owners of vehicles who are, and I'm quoting, engaged in the trade or business of renting or leasing vehicles. Interestingly, these companies want to be covered by that federal law, but they don't call out another federal statute covering rental car companies that requires the grounding of any rental vehicle that has an open safety recall until that car is repaired. So again, they want to pick and choose what laws apply to them and which ones don't. And this inconsistency in the bills, or in this bill as well, but that is why we support and we need the scope language. It is imperative that it be included in the bill to ensure that while undefining them as a car rental company for insurance purposes, it does not allow these companies to avoid other areas of the law where it is appropriate to see them as car rental companies, such as for taxes and for airport purposes. Excuse me. Thank you for your time. Be happy to answer any questions.
Thank you for your testimony. Questions for the witness? Senator McCreary.
Thank you for being here. Before I ask my question, I just wanted to let you know I had a good experience with Enterprise on Ladue Road in Clayton. So
oh, wonderful.
Very, very great facility, top-notch folks there.
Thank you.
And the directions they gave me was to drive the rental car as if it was my own car, so I drove it like an old lady. So my question for you, I hadn't thought about the recall part of it. Mm-hmm. So if I was part of a peer-to-peer car sharing and my car had a recall on it, I would still, your opinion is that I would still be able to have my car be used in that?
Well, and I believe the language is in the bill because it's part of the NCOIL model. Regarding safety recalls,
yeah,
my understanding is the first time that you list your personal vehicle on the site, the platform will verify that there are no open safety recalls. Once the vehicle is on the site and a safety recall comes in, it's up to the owner then to delist that vehicle. But there's nothing that requires them to do that, as far as I can tell.
And
unlike the federal law that
I
requires
was
us
going
to
to
ground
say,
those
my
cars.
understanding is that that Enterprise follows those laws as it relates to recalls.
It's a federal law that actually we helped pass in 2015 with Senator McCaskill
Yep.
and others. So.
I remember that. I'm on an organization that's focused on consumers and consumer safety,
Missouri.
and
Yep.
I remember recognizing you for that. So.
Absolutely.
Very good. Thank you.
My apologies. Any other questions for this witness? Seeing none, thanks so much for being here.
Thank you very much.
Next witness in opposition to Senate Bill 181. Please proceed when you're ready.
Good morning, Mr. Chair, members of the committee. My name is Clark Carricker. I am head of state and local government affairs for DoorDash. For those of you who don't know, DoorDash is a technology company. We connect consumers with their favorite local businesses. Here in Missouri alone, we have 8,000 businesses, unique businesses on our platform, and we create supplemental earnings opportunities for over 175,000 independent contractors in this state that we refer to as dashers, but they're the couriers who complete our deliveries. We appreciate Senator Coleman's interest in this bill. Oh, Crawford, I'm sorry, look at me, I'm wrong state. That was Nebraska last week. So we appreciate, and the willingness to meet with us after the committee. Our comments, or my comments today, are in relation purely to the DNC portion. The peer-to-peer is not of interest to us. In general, DoorDash does support industry-wide auto insurance standards for delivery platforms. And we are proud that we currently offer $1 million in backup automobile liability coverage to dashers while they are completing a delivery. So from the moment they say, yes, I want to pick up the Qdoba order until they drop it off at the house, there is a $1 million policy that we have. And we think that's good practice. And that portion of the bill is fine with us, and we think it's good policy. It's the delivery availability period that gives us heartburn, the time that the app is open. Because our folks are independent contractors, they have no obligation to take any offers, and we can't force them to, nor do we want to. And so frequently, dashers will have the app open as they're dropping a kid off at school or driving home from work, just to see if they get an offer they like, one with a big tip or one that's close to their house, right? And they take one if they do, and otherwise they don't. This bill would contemplate that we would have to carry insurance during that portion. And that, we think, invites a fraud risk, because you could sign up for our platform, and sign up is a day. You sign up, we do a background check, and you're good to go. And then as long as you have the app open, DoorDash would be the primary insurer. And we think that invites fraud, and it doesn't make sense. The other thing is, frequently folks don't just work for us, they also shop for Instacart, or they do orders for Grubhub. And you might have multiple apps open. You guys have probably seen that in rideshare. We have Uber and Lyft, right? And so in that case, what happens? Is it us because you had DoorDash open? Is it Instacart because you also had that open? Whereas just if you're doing a dash, right, we know you're currently doing a dash, and therefore our insurance should kick in. So at a minimum, our suggestion would be to strike that delivery available portion and apply the bill solely to all folks who are on delivery. We think that would provide nice coverage, but would be much cleaner. We have some technical issues on top of that. I don't want to bore the committee with those issues, but I think we can talk about those in the Senator's office later.
Thank you. Questions for this witness? Senator Trent.
Thank you, Mr. Chairman. So what do you do right now if you get sued and someone alleges that a person was out for delivery on your app, and you are involved in that lawsuit? Like, how do you determine whether it was open or closed right now?
So we obviously track the dashers from the moment they say, yes, I want that offer. Our insurance then applies. If they're just driving around, it doesn't, except for in 3 other states. And it's new in those states, and it's been tough for us to deal with. It's like analogous to if you're working an office job and you get in a wreck on your way to your office, right? The corporation isn't paying that. It's your personal. To us, if you're not on an offer, this is non-work commute time.
Well, sure, but it seems like this is a problem that can be solved by, like, that you can currently solve this problem just with the technical analysis of whether or not they were on a job or they were just out on their own business. Like, you can tell that based on the activity that they're engaged in while you're tracking them.
So that's actually the scenario we would advocate for, that we would like. As drafted, it's any time the app is open. So they just flip the app open, even if they have no intention of taking an offer, or if they're just waiting for a Goldilocks perfect offer, and then we kick in, and that we don't think makes much policy sense.
Well, but you're as I understood your testimony, what you were saying is that you thought people would engage in fraud, where they were not actually attempting to deliver or to engage in business, but instead were just having it open for insurance purposes. But also, it seems like, based on your testimony, that you could tell whether or not they were actually had it open just for the sake of being open versus having it open to engage in business.
No, so sorry if I need to clarify. No, we can tell if the app is open, and we can tell if they're on an active job or not. But we can't mind read, so we don't know if the app is open just to be open, or if the app is open because they're actually looking for.
I mean, there would be signs, right? Like if they have the app open and they go to their kid's school and go back home, then it doesn't seem like they were doing a job. But if they're just bouncing around between 2 or 3 different locations that, provide that they would be potentially picking up from, even though they're not on a job, seems like they're looking for a job. They're actually on the job looking for a job.
No, I see what you're saying, but there is no, under the draft, there is no intention requirement. It's just purely, is the app open or not? So even if we can prove, hey, I think he's going to Timmy's school to drop him off and back, and they've done this every day and they've never taken an offer, it wouldn't matter if this was enacted as is. I think one of the compromise things that we could talk about is whether or not a dasher has done a dash within the last 24 hours. In that case, if you have the app open and you dashed yesterday, the likelihood is probably pretty high that you're legitimately looking for a dash. Unlike me, so corporate employees, we actually have to dash. My last dash was in September. I hit my quota, and then I was off I went. I threw the app on as I drove through Missouri. So in St. Charles, I stopped and I got a cup of coffee and I turned the app on, and I received offers as I was driving to the State House. I certainly didn't have any intention of ever taking those. I was just curious to what it would look like and what I would get, right? That's what we wouldn't want to cover, because I haven't dashed in September. I was doing something else just because I had the app open. That should be on my personal insurance as I drove here.
All right, thank you for that testimony.
Thank you.
Further questions, I have some. So just to be clear, I guess it just seems strange to me. You guys don't ask where your dashers' kids go to school, do you?
We do not.
Okay, no. I didn't think so. So it would be very difficult for you to know what school their kids go to and what their true intentions and activities are. How long do you preserve the data you're collecting? You're collecting data every millisecond or more. How long is that preserved for each dasher?
So that's a great question. We only keep the data for when they're on active orders, right? Because if someone complains later, we want to see, like, yeah, he picked up the Pizza Hut at this time and it was dropped off at this time. We don't keep any data as they're just driving around, not on orders. There isn't much value in that for us.
So you're pretty selective with what data, when the app is on, you're pretty selective with which data you're keeping and which data you're not.
That's right. We figure it's only our business once they've said, yes, we want that offer, because then they're on our clock.
Okay. And how long, if you've chosen this data to be preserved, how long is it preserved?
That I'd have to get back to you on. I don't know.
Okay. Any further questions for the witness? Seeing none, thanks so much. Next witness to testify in favor of Senate Bill 181.
I think it's still morning. Good morning, Mr. Chairman, members of the committee. My name is Arnie C. A.C. Dino, State Public Advocate I submitted my form in favor of this bill. I testified earlier this week about 3 other companion bills over in the House. I believe in financial responsibility when someone gets behind the wheel of a vehicle anywhere in our state. This is common sense legislation. I believe that there needs to be qualified and responsible liability, responsibility and accountability to the driver, no matter what they're doing, whether it's a sharing of a vehicle, whether it's delivery, whether it's Uber, whatever it might be. There needs to be that sense of human responsibility and accountability. It has been decades and decades, and I believe it's the 80s or early 90s. I'll have to do some more research to find out exactly what year that the legislature upped or increased the minimum standards of liability. Currently, it's a low threshold of $25,000, $50,000 for an accident. As we all know, a lot of the vehicles that we're driving today have a lot of components, a lot of computer components. For example, I know for a fact that just a screen on a car and that computer to run that is $10,000 if it goes bad. And so if you hit 2 Mercedes in an accident, you're talking about $200,000, and that's not even considering possible injuries and that type of other things that might come up. Vehicle financial responsibility, in my opinion, is highly mandatory. I know there's been times in my life when I didn't have enough money, and guess what? I parked my car because I couldn't afford to make the premiums. If you're going to be out on our public roadways or public highways, you have that responsibility of financial responsibility. God forbid, if something happens and you do something unknown or have an accident, that you can't turn someone's family upside down. And for those reasons, I believe that financial responsibility must be mandatory. I think our courts are too lenient, especially in the municipal courts, when people drive without insurance. There's some counties that have a high yield of driving without any insurance, and then they get a suspended license, and they just a constant in and out of the court systems. And I think that we need to bring that to a stop, and there needs to be human responsibility and accountability. For those reasons, I highly support SB181.
Thank you for your testimony. Questions for this witness? Seeing none, thanks so much for being here. Next witness to testify in opposition. Please proceed when you're ready.
Mr. Chairman, committee members, my name is Jeff Brooks, registered lobbyist for Walmart. We do a lot of deliveries, and our digital platform sounds like it's very similar to DoorDash. The first half of this bill is not anything we're concerned with. The second part dealing with the Delivery Network Company Insurance Act, and really it's just that first paragraph that also deals with the delivery availability period. According to this language, our apps are on. Our drivers turn the apps on, and as you've already heard, they could be in carpool. They could be working for other app companies and delivering. Until they accept a job, they are not actively working for Walmart. We are perfectly fine, and it's our duty to be responsible for those drivers when they are actively engaged in delivering for our company. But anything prior to that, they could literally be logged onto our system for weeks and not be actively delivering for us. It's like having your phone on and it's ringing and you're not accepting those calls. But according to this language, you're available to accept those calls, therefore you're responsible for primary coverage. If you have some of these drivers that are, delivering for multiple companies, they have multiple apps on, you're talking about overlapping primary coverage from all those companies, whether or not that driver's working for one or even doing something else in their daily lives. So it's just we just feel like that definition requires just an overly broad mandate for primary coverage.
Thank you. Quick question. So your compensation model is strictly when you're delivering something or picking it up is the only way they get compensated? Do they get compensated for opening the app? Do they get incentive for having it? And
they're not being compensated just for logging on. Our model is based on them accepting a job, which they actively have.
It's the only way they get paid. No other incentive.
I'm not 100% sure on the the way it's set up in every state, but I will definitely get those answers for you.
Thank you. Questions for the witness? Senator Trent.
So my understanding of the similar statute for ride sharing in the state is essentially that if the app is open, they're looking for rides, then there's some kind of insurance requirement there. What differentiates what your company is doing and the other companies that do this sort of thing and like your typical ride sharing company?
I can't speak to the other activities and the other business models. We do have insurance requirements in this state for individual drivers. We have commercial insurance requirements for delivery drivers that are employees of a company. We just think that it doesn't make sense to extend that primary coverage mandate to a company like ours if the individual's not actually engaged with us. We don't know what they're doing. We don't control them. They're true independent contractors. We don't know what they're doing in their daily lives. So we're just suggesting that we are absolutely responsible once they engage with us and they are doing something for us.
All right. Thank you for that testimony.
Further questions for the witness? Seeing none. Thanks
Thank you
so
very
much for being
much.
here. Next witness in favor of Senate Bill 181.
Mr. Chairman and members of the committee, thank you for your time today. My name is Jennifer Rodewald. I am Government Relations Counsel for Shelter Insurance. We're here today to support both parts of the bill. We are very much in favor of clarifying when insurance covers and whose insurance covers what, in terms of when your constituents are out there getting into accidents with people who are engaging in this gig economy. We think there should be clear guidelines as to whose insurance should step in first and cover the person, so the person isn't out there on the lurch, and then let the companies fight it out behind the scenes as to the fact question of who is actually, whether or not they were actually on the job at the time or not. I will point out that for the DNC portion, it is not just that the app is on that makes that defines the delivery availability period. It also says the person is logged into the digital service, into the digital network, and is available. Now, the statute doesn't anywhere define what available is, so all these companies can go out and in their contracts with these people define what available is. DoorDash wants to say you're only available if you've accepted something in the last 24 hours. They can do that when they're contracting with these people as the statute or as the bill is written. So we just ask that you pass this favorably.
Thank you so much for your testimony. Questions for this witness, Senator Trent?
Yeah, it does seem like, I don't know if this is a question or comment, but it seems like that they're engaged in commercial activity while they're looking for work. Would you think that's fair?
Yeah, and it's my understanding that, and maybe I have a misunderstanding of how these work, but that they kind of troll around in the areas where there's a lot of activity. So they're in the business district where there are a lot of restaurants, and that way they can find the best kind of thing the best job to pick up on. And while they're driving around, they're scrolling on their phones, looking through their apps, and it's increasing the risk in terms of when we are, as an insurance company, rating and trying to figure out how much premium to charge someone, we're looking not at commercial activity, which is what that would be considered. So we aren't appropriately rating for the risk in terms of this kind of commercial activity.
So then if this distinction isn't made, would it then potentially impact your, like, how you evaluate insurance? Like, would you have to then try to take this into account, or would it just be like an impossibly complex task to try to do that?
I would have to consult our actuarial people. I'm a lawyer because I don't do math.
Well, it sounds like we don't have enough green shades here to, so I appreciate that, though. Thank you.
Further questions for this witness? Seeing none, thanks so much for being here. Next witness to testify against Senate Bill 181. Seeing none, next witness to testify in favor of Senate Bill 181. Oh, I'm sorry, come on up. My apologies. Please proceed when you are against Senate Bill 181. Please proceed when you're ready.
For having me. My name is Bailey Geller. I'm a lawyer based out of Springfield, Missouri. I'm here on behalf of the Missouri Association of Trial Attorneys today. I'd like to address the peer-to-peer aspect of this bill. I'll just briefly address a couple things, starting with the narrative on this. And so there's a host who owns the vehicle, then there's this company, the peer-to-peer company who's in the middle, and then there's also this driver. One individual we really haven't talked about are the Missourians who are on our roads who could get into a collision with these drivers of these vehicles. And so one aspect of the bill is that it only requires the state minimum insurance. And as we know, for most folks, when you get into a collision, that already is too low. And so those were implemented years ago, I think several decades ago. The price of gas has gone up, the price of eggs has gone up, the price of medical bills have gone up, and our minimums have not gone up. Now, when you implement this, there's also a heightened risk. We know when you rent a vehicle, it's an unfamiliar area, it's an unfamiliar vehicle, and when you're adding on with this new aspect of peer-to-peer, there's also exotic cars that are rented on there, there's different requirements for age, and the risk of getting into a wreck is higher. So you have a heightened risk, but you don't have any heightened responsibility on that. And so that's really the only aspect that I'm going to address here today, is implementing some type of higher minimum as it relates to the peer-to-peer companies. I know in the House hearing yesterday there were some suggestions on that, hiring that. I think that's a step in the right direction. Given you have these heightened risks, there should be a heightened responsibility as well.
Thank you. Questions for the witness? Senator McCreary.
I'm new to this committee, so I hope I'm not asking questions that are too basic, but so the insurance, you've got insurance that covers the actual vehicles, but then there's also has to be insurance that covers like injury to people as well, or is it all just one lump sum, one limit?
So currently, as I understand it, it's written to where the company has to ensure that somebody has minimum.
Okay. And so you are saying that the minimums are too low, that they haven't kept up with the times, basically.
Yes, I'm saying they haven't kept up with the times, and then when you also have this new development of the peer-to-peer, and we've been, if you lend somebody your car, normally you are going to make sure that person is a safe driver. I'm not going to give my car to any person. When you're going through this peer-to-peer company app, you don't have those same checks in place. And so the risks are higher for some of the reasons I mentioned, but the responsibility in terms of insurance is not.
I do agree, like anytime, you drive someone else's car, it feels more dangerous, It's like even if you're just driving your mom and dad's car, it's like you don't know where everything is. So I hadn't really thought through that, that you're not as familiar with a car that you might be renting through peer-to-peer. So thank you.
Thank you.
Further questions for this witness? Seeing none, thanks so much for being here.
Thank you.
Anyone else to testify in favor of Senate Bill 181?
Good afternoon, Mr. Chair, members of the committee. Philip Arnzen with the National Association of Mutual Insurance Companies, and we'd like to go on the record in support. This legislation just creates a good framework to make sure that if there unfortunately does happen to be an accident or an incident, it's clear who's liable. That makes the process less stressful for everybody involved, makes it easier to determine liability, and then also will hopefully keep costs lower because you don't have attorneys going back and forth with the various entities. And additionally, it makes sure that there's no gap in coverage as well when somebody is using these apps. So those reasons, NAMIC is in support.
Thank you so much. Questions for this witness? Seeing none, thanks so much for being here. Next witness to testify in opposition to Senate Bill 181. Seeing none, next witness to testify in favor of Senate Bill 181.
Good afternoon. My name is Matthew Smith with Associated Industries of Missouri. I want to go on record of support of this bill. Specifically, want to echo some of the sentiments before, and we specifically support the scope language in the bill. So happy to answer any questions.
Questions for this witness? Seeing none, thanks so much for being here. Next witness to testify in favor of Senate Bill 181. Seeing none. Anyone here to testify for informational purposes? Thank you. Seeing none. Senator Crawford, you are recognized to close.
I think we've heard plenty of testimony, and I'll just leave it at that. Thank you.
Thank you. This concludes our hearing on Senate Bill 181. The committee will stand at ease.
Executive session. Do I have a second? Have a second. All in favor say aye. Aye. Those opposed say no. And the ayes have it. I move that we take up Senate Bill 97. Do I have a second? I have a second. All those in favor say aye. Those opposed say no. And the ayes have it. This is my bill that we heard last week relating to banks and trust companies. We do have a committee sub. We actually heard the sub last week, so there are no changes to the bill that we actually did here last week. That ends in .03C, and I move that we adopt the substitute. Do I have a second? I have a second. Any discussion?
I didn't put it in there because we didn't change it.
Seeing none.
Madam, can you, sorry, Madam Chair, can you repeat what the most recent sub ends in?
Yeah, the sub that we actually heard the sub last week on this bill, and it's .03C. Wait a second. I'm sorry.
Okay.
My script says the wrong thing.
Okay.
It's 02.
Okay.
We did not make any changes from what we
Okay.
heard last
Sorry,
week.
I thought I heard you say 3.
You did. I said the wrong number. Sorry about that. But we did hear that bill in this form last week. It's dealing with the trusted contacts. Actually, it's Senate Bill 97, 99, and 657. It was a combination of those three. And I make a motion. Let's see, did we adopt the sub? Okay, we've already adopted the sub.
Oh, wait a minute, we have to roll call.
Sorry. Right here.
Correct.
Sorry, I lost my place. Okay, just to make sure, I'm going to make a motion and we adopt the sub to make sure I did it. All those in favor of adopting the sub, say aye. Aye. Those opposed, say no. And the ayes have it. I now move that we vote Senate Bill 97 with Senate Committee substitute out of committee do pass. Do I have a second? I have a second. Any discussion? Hold on just a second.
We indicated.
Okay, my apologies. We did hear 03 last week. We put so my script was correct. We had made a change, but what it did was we did hear that version. We're not changing anything from what we actually heard last week. Is that totally confusing to everybody now?
So just to clarify, the version we heard includes credit unions? Is that?
What we did an internal, before we ever got to the hearing, we had another sub in between.
Okay.
That is not the one we heard. We actually heard 03 last week. Correct.
Thank you.
Clear as mud. Do you need a copy of that?
I'm sure I have it.
Okay.
Yep.
It actually it added 97, 99, and 657. and it included the credit union information in the trusted contacts.
Okay.
But we did not make any changes from what we actually heard last week.
Very good. Thank
My
you.
apologies. All right, any further discussion? Hearing none, Barb, please call the roll.
Senators Crawford.
Aye.
Gregory. Brown. Huff. McCreary. Mosley. Trent.
By your vote of 5-0, you have passed Senate Committee Substitute for Senate Bill 97. I now move that we take up Senate Bill 98. Do I have a second? I have a second. All those in favor say aye. Aye. Those opposed say no. And the ayes appear to have it. The ayes do have it. This is also my bill that we had last week, and this is the bill that is relating to financial fraud. And we do have a substitute, and this is going to be really confusing. You have not seen this substitute. Senator Trent wanted to tighten the language a little bit, and I'm going to let him explain that. We worked with him to explain that.
Certainly.
Senator Trent.
Thank you, Madam Chairman. So on the first page there under 570.148, Section 3, everyone will recall there was a laundry list of offenses. Some of those were not defined, or we could not find them defined anywhere else in statute. And so rather than go with undefined terms, what we've done is tried to use terms that will hopefully be more recognizable to prosecutors that would be utilizing this statute. So things like fraudulent pretenses, representations, promises, physical devices or electronic devices, or any means of any kind, or any fraudulent scheme or coercion to cause funds to be withdrawn or taken, so forth. Basically, the goal there is to have sort of a catch-all phrase for any kind of fraudulent or coercive action that would end with funds being transferred out of a person or an institution's accounts to the fraudulent actor.
Thank you, Senator. And just to be clear, we had emailed the O2C earlier today, but O3C you have in a folder in front of you because that was a very last-minute change just right before we came into the hearing.
I think the only difference there is we added, or the only substantive difference, there may have been some rephrasing, but I believe the old version covered physical devices but not electronic devices, and so we wanted to add electronic devices, which I believe would cover things like software, computer programs, remote hacking, that sort of thing, in the language.
And sorry to throw that on you at the last minute. Does anyone have any questions about that? I think just trying to tighten up and clarify the language. Okay. Again, we have a committee sub ending in .03C. I move that we adopt the substitute. Do I have a second? Second. I may have already done that. All in favor say aye. Aye. Is there any further discussion on the substitute? All those in favor of adopting the substitute, please say aye. Aye. All opposed say no. And the ayes have it. I now move that we vote Senate Bill 98 with Senate Committee substitute out of committee do pass. Do I have a second? I have a second. Any final discussion? Seeing none, Barb, please call the roll.
Senators Crawford.
Aye.
Gregory. Brown. Huff. McCreary. Mosley. Trent. 5. Nothing.
By your vote of 5-0, you have passed Senate Committee substitute for Senate Bill 98. Okay. I now move that we take up Senate Bill 99. Do I have a second? I have a second. All those in favor say aye. Aye. Those opposed say no. The ayes appear to have it. The ayes do have it. This is my bill that we heard last week relating to the trusted contacts. We do have a committee sub on this bill ending in .02C, and I move that we adopt the committee substitute. Do I have a second? I have a second. All in favor say aye. Aye. What the substitute does, we originally did not have the credit unions included in that bill. This includes the credit unions in it, and that's all that the substitute does. Is there any discussion? Hearing none, all those in favor of adopting the substitute say aye. Aye. Those opposed say no. And the ayes have it. I now move that we vote Senate Bill 99 with Senate Committee Substitute out of committee do pass. Do I have a second? I have a second. Is there any final discussion? Seeing none, Barb, please call the roll.
Senators Crawford,
Aye.
Gregory, Brown, Huff, McCreary, Mosley, Trent.
By your vote of 5-0, you have do passed Senate Committee Substitute for Senate Bill 99. I make a motion we go out of executive session. Do I have a second? I have a second. All in favor say aye. I make a motion that we adjourn. Do I have a second? Have a second. All in favor say aye. Aye. We are adjourned. I had too many subs, not subs. Some it was like.
Too little time. Yeah. Well, I hope I didn't make it worse, but I always like to make sure I
No.
know what I'm voting
Well.
on.
No, I'm glad you did.
If you don't mind, is there